Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we look at October's retail sales. Neville Bennett takes a look at the medium-term prospects for our agricultural industry. We'll also check what is happening with our tourism industry. And finally we'll wrap up with details of some other relevant items of interest. Statistics New Zealand today reported that retail sales suffered a broad-based decline in October, but we think this is a tad pessimistic. Their conclusion is based on seasonally adjusted data, but if you look at the results year on year, retail sales were up 5.5%, excluding motor vehicle retailing. It is appliance retailers who are struggling the most. They are down 2.5% year on year. But there are some notable industries doing well. Supermarkets, for example. They are up 4.5%. Cafes and restaurants are up 9%. Most other sectors are making sales gains only just ahead of inflation, so real growth is not strong, but it is not actually in decline. Motor vehicle sales are also growing at just over 5% year on year as well. These sales were just shy of $700 million for the month, which is a good result. And we're buying plenty of petrol. We spent 15% more in October this year than the same period last year. Unleaded 91 cost $1.60 at the pumps in October 2007, up from $1.44 last year. That's up 11% in price, so even our volume of petrol purchases rose 4% compared with a year ago. Retail sales were actually reasonably healthy in October. Dr. Neville Bennett has looked at the prospects for our rural sector from an international economics point of view, and he is decidedly bullish. He reports there are structural reasons why returns in this sector will soon be on the way up, and stay up for a long time. The world will increasingly value our grass and our rainfall. Rising standards of living mean red meat consumption will rise quickly, and dairy products will grow in demand. But some of our gain will be because of policy decisions in other big countries, especially Europe. Their programs to convert grain to fuel significantly changes the supply and demand balance for food producers. Less supply when there is more demand. Countries like New Zealand will really benefit. And other public policy unintended consequences are happening with climate change decisions as well. New Zealand will get a net benefit from them. You can read the big picture review from him on the links on this website. The accommodation index for October is now out, and it reveals a growing softness in a core part of our tourism industry. October was the first month in almost a year and a half to show a decrease compared with the same month the previous year. Guest nights spent by international visitors were 1% lower. The largest decreases were recorded for visitors from Asia and from the United Kingdom. The Auckland region was where a lot of that softness happened. Domestic guest nights decreased 2% over the same period. The largest decreases in domestic guest nights was in the October region. The more expensive end of the industry is taking the brunt of this slowdown. It is the budget end that is holding up better. And finally today, a wrap-up of some other items of interest. Oil prices are retreating as stocks in the US seem higher than was realised, and a slowdown there may dampen demand. This may soon start having a positive effect on our pump prices. It looks to us as we may see a 3 or 4 cent fall in petrol prices later this week or next. China's annual inflation rate has accelerated to almost 7%, the quickest pace in 11 years, and their government is taking extreme steps to choke off new lending to private businesses in order to bring prices under control. New lending for November was constricted to less than half of last year's figure. It effectively means that banking activity has ground to a halt, said one analyst in a Sydney Morning Herald report. 90-day bank bill interest rates remain unusually volatile, and with this comes some risk that some banks may put up their floating mortgage rates if they don't calm down soon. Margins on floating rates are unusually low at present. It would be an unfortunate signal if this happens this side of Christmas. We'll be maintaining a close watch on this and the interbank cash rate, which is also unstable. Based on NZDX filings yesterday, South Canterbury Finance is quietly building a stake in Auckland-based Dominion Finance. Its holding is now up to almost 8%. The US Federal Reserve, European Central Bank and 3 other central banks moved in concert overnight to alleviate the credit squeeze threatening global growth in the biggest act of international economic cooperation since the September 11 terrorist attacks. The Fed said it will make up to $24 billion available to the ECB and the Swiss National Bank to increase the supply of dollars in Europe. The Fed also plans 4 auctions, including 2 this month, that will add as much as $40 billion to increase cash in the US domestic economy. You can get more news and start with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.